The last few days have been very interesting for the crypto market, as many people have been focusing on the spot Bitcoin ETF applications and what's going on with the SEC. So today's video, I want to address the most important things going on there and also address key things going on with Celsius, as they've been approved to sell off hundreds of millions of dollars of altcoins starting today, July 1st. So starting off with the SEC, we've seen that Bitcoin recently took a drop in a matter of a 24-hour window, as the SEC said that the spot Bitcoin ETF filings that were recently done by BlackRock, Fidelity, and many others were inadequate. In this announcement, they ultimately said that the recent filings to launch a spot Bitcoin ETF were inadequate because they didn't ultimately share enough detail with respect to the surveillance sharing agreements, including which spot Bitcoin ETF exchange would be used. So there was a lot of fear in the markets as these applications were rejected, and people were wondering, well, what were the next steps? But the good news is that we've already seen companies refile these spot Bitcoin ETF applications. For example, we have seen that SIBO recently refiled the Fidelity Bitcoin ETF application, and they said in this application that they plan on picking Coinbase for policing for this partnership, and ultimately that is what they're going to do to combat all the issues that the SEC said in the prior rejection. So they said that the exchange operator SIBO refiled on Friday after the rejection, and they said that they are going to continue plans of launching their spot Bitcoin ETF, as they are going to name, Coinbase as the crypto trading platform that they are going to partner with and enter into a surveillance sharing agreement with. So this is good news. We're already seeing that after the rejection, companies are now refiling and clarifying how they're going to, use this surveillance aspect of their spot Bitcoin ETF. So it was a bit of bad news with the rejection, but a bit of good news with what we've already seen with, refilings. Now let's switch gears a bit and talk about mass adoption and altcoins, because at the end of April of this year, I started following a project on Twitter called Islamic Coin. I mentioned it in a few videos in passing, but since we talked about it previously, they've made a few major announcements and developments that I wanted to share with you because I'm extremely excited about it. So if you haven't seen when I previously talked about it, Islamic Coin is a cryptocurrency project that is targeting 1.8 billion Muslims worldwide and is designed to create value for the Muslim community. This is one of the largest communities in the entire world, and if just 3 to 4% of the Muslim community buys into this project and supports this project, it would become a Bitcoin scale asset. And since we last spoke, what has happened is they've made a few major announcements. First of which is that they have surpassed 1 million followers on Twitter, and they have continually gotten great engagement, which is exciting to me. The second, which is probably more exciting, is that they are officially launching on September 1st of this year. This has been a long time in the making. They've posted a video about this on social media, and this is something that people are very, very excited about, as at least what I've seen from the responses on social media. So this project, in my opinion, has huge potential, and I'm going to continue to follow it over the next few months because it's targeting a very tight-knit community in the Muslim community and already has big name connections like the UAE royal family. The UAE royal family is actually on the advisory board of this project, and we could see over the past few years, whenever a royal family is connected to a company or a business or anything for that matter, usually succeeds, and there's a lot of money behind it. So it makes me even more bullish on this project. It's also giving back to the community. Every single time a new Islamic coin is minted, 10% of the issued amount is deposited into a special evergreen DAO, which is a nonprofit virtual foundation that invests into Islamic charities. So this project is all about the Muslim community, and not only is it building a strong community, but also giving back. So I've been following this project for a few months on Twitter, and right now the only way you can get ISLM tokens is via the Hawk wallet. You can download on the Google Play Store, and you can participate in their activities like guild and community drops and airdrops. So you need to make sure you have the Hawk wallet and you follow them on Twitter to stay up to date on what is going on. Next thing I want to talk about is going to be what's going on with Coinbase, because while we have seen a lot of fear in the market with the recent rejections and just what's been going on with spot Bitcoin ETFs and lawsuits, Coinbase shares are actually up 35% since the SEC sued the crypto exchange for allegedly selling unregistered securities. This is a big deal because we've seen seen that Coinbase was at a low of around $50 per share. Now it is back up over $70 per share, up almost 50%, around 35 to 40% in just the last few weeks alone. And this shows us the resilience of the crypto market, because despite everything going on with spot Bitcoin ETFs being rejected, we saw Bitcoin, drop in a single day, but bounce back. Despite what's going on with Coinbase and the lawsuit, we saw Coinbase drop, but now they've bounced back. This is showing the resilience of the crypto market and how it looks like at this point, things are here to stay. We're going to start seeing institutional adoption, and it's just a matter of time now that we're starting to see BlackRock, Fidelity, and some of the biggest financial players in the world, eagerly trying to get Bitcoin investment products out there. So that is a good sign, in my opinion, that we're seeing the resilience of not only Bitcoin's price to, the bad news, but also Coinbase's price to the recent lawsuits. Now let's talk about what's been going on with Celsius, though, because now Celsius, the bankrupt crypto company that went bankrupt last year, they've officially been approved to start selling more than $170 million of ADA, Polygon Matic, Solana, and many other altcoins for Bitcoin and Ethereum. In the recent court documents, it says that Celsius may convert or sell any non-Bitcoin and non-Ethereum cryptocurrencies, and they can then sell that for Bitcoin or Ethereum to then send back to any creditors in the future. So that entails 90 million Matic tokens, 103 million ADA tokens, 161,000 Sol, 3.3 million Link, 1.8 million Polkadot, 200,000 Litecoin, 106,000 Aave, and a few other coins. So it's not entirely clear if they're going to sell these, but now, because they had requested to sell these tokens, they can start selling as of today, July 1st, which could put some downward pressure on some of these altcoins. You could either look at it as a negative in the sense that short term there might be a little bit of a sell-off, but I'm expecting them to do this over a longer period of time, not just dump it on the market in a single day, and that could present some buying opportunities for you as an investor if you're bullish on any of these different altcoins. The last thing I want to talk about is really going to be what's been going on with CoinShares. So CoinShares is a data analytics company, and recently they came out with a new report, their weekly investment report, that showed inflows into digital asset investment products. We used to talk about this all the time on the channel, but crypto investment products saw their largest weekly inflow since July of 2022 last week. This was the largest we had seen in over a year. And you can see on this chart right here that inflows into crypto asset investment products were nearly $200 million. There's $199 million. Most of this was coming into Bitcoin, as you can see right here. Bitcoin was $187 million, Ethereum was around $8 million, and other multi-asset investment products were $8.1 million. But this has a lot to do with the fact that bigger players and institutions are getting excited that BlackRock filed for a Bitcoin ETF application. We saw Fidelity have their spot Bitcoin ETF application, and we're starting to see a little bit more progress on the institutional front for crypto. So that's why we're starting to see that uptick in institutions putting money into digital asset investment products. And if you're looking at volume as well, you could see that trading volume in these different digital asset investment products was also up over 170% last week compared to the yearly average, which is a very big deal as well. So we're seeing volume increase. We're seeing more money come into this space from institutions, and a lot of this has to do with the exciting news about BlackRock filing and Fidelity filing for spot Bitcoin ETFs applications. Last thing I do want to go over is just going to be with Cardano really quickly. So I want to address some FUD with Cardano, because a lot of people have been telling me this article and saying how Cardano, over 90% of addresses are in losing positions, transaction volume has slumped, and whales are leaving. So I want to address this because it's not necessarily 100% as it seems on the surface. When you're looking at it, it says around 90% of Cardano addresses are currently in the red, which is true. Most people got in above like 30 cents per coin during the last bull market. That's true. But many of these people have not sold in over a year, meaning that they are long-term investors, and sort of changes your outlook on that, because while a lot of people might be in the red, they're continuing to add to their positions and are long-term holders. So it's not like they're planning on selling anytime soon. In addition to this, I want to address what's going on with the number of large investors that they are saying is continuing to fall. When you read this report, headlines make it seem like we're seeing whales have a mass exodus from Cardano. But if you read the report, it says The number of large investors continues to decrease as it has fallen by 2 addresses within the last few weeks. 2 addresses. Who cares about 2 addresses? I get it that there's 140 large investors that make up about 22% of Cardano's total supply, but still, it is like 1% of the whales have left in the last few weeks. That is not a significant number, something that people should be worried about. When you are reading these headlines, you would think it's like half of the whales or at least 30% of the whales. It's 1% of the whales have left in the last few weeks. So just got to look at all the details when people are talking about, bearishness on an altcoin or bearishness on crypto, because headlines sometimes look really bad, but when you start digging down a little bit deeper, it's not as bad as it seems.